Let's be honest, health insurance in the US can feel like a total mystery. You're paying for it every single month, so why do you still get bills in the mail? Well, in this explainer, we're going to pull back the curtain and break down exactly where your money is going, step by step.
This is the big question, isn't it? It feels like you're paying for a service, but then you have to pay again. It seems totally backward, but believe it or not, this is exactly how the system is designed to work. So let's dive into why that is. Here's our game plan. We'll start with the most basic cost, the price of your plan itself. Then we'll walk through what happens when you actually need care, talking about deductibles, copays, and coinsurance. After that, we'll look at the all-important safety net. And finally, we'll tie it all together to answer that big question. Why isn't this stuff free? All right, first things first. Let's talk about the cost you pay just to have health insurance in your back pocket. This is called your premium. Think of it as the non-negotiable, fixed amount you pay every month to keep your health plan active. You pay this whether you go to the doctor 10 times or not at all.
The best way to wrap your head around it is to think of it like a subscription service, like for streaming or your gym. You pay that monthly fee just to have access to the service. Your premium is exactly that. It's your subscription fee for health coverage. Okay, so you're paying your premium, but now you actually need to see a doctor. This is where you run into the first and often biggest hurdle before your insurance really starts to flex its muscles. And that hurdle is your deductible. This is a set dollar amount, say $2,000 or $3,000, that you have to pay completely out of your own pocket for healthcare before your insurance company begins to chip in for most services. And that's the key part. Until you've spent enough to cross that annual deductible threshold, you are basically paying the full negotiated rate for most of your medical care. It's only after you've hit that number that the real cost sharing with your insurer begins. Now, a few quick but important notes here. The good news is that many plans will cover preventative care, like your annual physical, for free, even before you've hit your deductible. Also, if you're on a family plan, you'll likely have a deductible for each person and a larger one for the whole family. It all comes down to a classic trade-off. If you pick a plan with a nice low monthly premium, you're almost certainly signing up for a much higher deductible. So let's say you've done it. You've met your deductible for the year. What happens now? Well, you move into the next phase of paying for care. And this is where two very important words come in: copays and coinsurance. Let's start with the copay, which is short for copayment. This one's pretty simple. It's a flat fee. So your plan might say that a specialist visit costs you a $30 copay. You pay that $30 and that's it. Nice and predictable. Coinsurance, on the other hand, is a little different. It's not a flat fee. It's a percentage. So after you've met your deductible, your plan might cover, say, 80% of the cost. That means you're responsible for the other 20%. That share is your coinsurance. So let's break it down side by side. A copay is a predictable, flat fee. You always know what it's going to be. Coinsurance is a percentage, which means the amount you pay totally depends on the total cost of the service. For a simple blood test, your 20% might be no big deal, but for a major surgery that costs thousands, well, that same 20% can be a much bigger number. And really, that's why this matters so much. Understanding these terms isn't just about learning vocabulary. It's about being able to look at your plan and figure out what your financial risk actually is. It's absolutely crucial. This chart really ties it all together beautifully. Your premium is your monthly membership fee. Then, when you need care, you pay everything yourself until you hit your annual deductible. After that, you share the costs with your insurer through either fixed copays or percentage-based coinsurance. So, with all these different costs, you might be wondering, does it ever stop? Is there a limit to how much I could possibly pay in a year? And thankfully, the answer is yes. It's probably the most important feature of your entire health plan.
This is your out-of-pocket maximum. It's exactly what it sounds like, the absolute maximum amount of money you will have to pay for covered health services in 1 year. And everything, your deductible, your copays, your coinsurance, it all counts toward hitting this limit.
And here's the best part. The moment you hit that out-of-pocket maximum, your job is done. For the rest of that plan year, your insurance company steps in and pays 100% of the cost for all your covered services. You pay nothing more. You really should think of it as your ultimate financial safety net. It's what protects you from a truly catastrophic medical situation and ensures that, even in a worst-case scenario, there's a hard stop on how much you'll have to pay. Okay, so let's bring this all back to where we started. Why does having health insurance still cost you so much money? If there is one thing you take away from all this, let it be this idea right here. Health insurance is a partnership. You're not buying a get-out-of-bills-free card. You're paying for a partner, the insurance company, who agrees to share the massive costs of healthcare with you, according to a set of rules. This is your financial journey over a typical year. It starts with you paying your monthly premium. When you get sick, you pay 100% of the costs until your deductible is met. Then you start sharing the costs through copays and coinsurance. And finally, if you have a tough year, you hit your out-of-pocket max and your insurer takes over completely. And that really brings us to the most important question of all. Now that you speak the language, premium, deductible, out-of-pocket max, take a hard look at your own plan. Does that particular mix of costs truly make sense for you, for your health, and for your wallet? We really hope this helped clear up some of the confusion. If you found this useful, do us a favor and subscribe to the channel for more explainers that break down the big, complicated topics. Thanks so much for watching.